everybody make sure you subscribe to J New Orleans. You don't want to miss a thing.
Hello, and this video today is sponsored by financial literacy. Financial literacy, and before we even could get into credit scores, financial literacy in the financial landscape most people are navigating is very important because the reality is financial literacy is not the norm, it's the exception. And in the United States, only about 50% of adults are considered financially literate. That means half the country understands how money, credit, debt, and interest work. And the other half is learning through trial, error, and often financial pain, which I'm one of them. I learned through years of bad experiences and decisions, and eventually took it upon myself to start studying financial literacy. And it definitely made everything much easier, more understandable, and it made me view everything differently. And when you break that down numerically, there are roughly 260 million adults in America. So if only half are financially literate, that means about 130 million Americans lack strong financial literacy skills. 130 million people making financial decisions without fully understanding the systems they're operating in. And when it comes to credit specifically, it gets even more eye opening. About 23% of Americans don't even know their credit score. That's nearly 60 million people being evaluated financially without knowing their own number. And if we go deeper, roughly 33% of Americans have never checked their credit at all. That's close to 86 million people driving financially without ever looking at the dashboard. So when we talk about money mistakes, debt traps, high interest, loan denials, we're not just talking about poor decisions. We're talking about a knowledge gap affecting tens of millions of people. And that brings me to this. Money without financial literacy is like trying to drive a car with the windshield covered. However, is not anything to feel bad about because a lot of the things that we need to know as adults are learned behaviors. And many of us grew up around adults that didn't have these behaviors either. So where would we have learned them? There's so many different things that we learn when we need it. And then we realize or wish that we would have knew it when we were children. But it's really no place it could have came from. And then the shame comes in where people wish they knew stuff sooner or they wish they can go back and change stuff. But all you can do is take the fact that you have a new knowledge for something to look around now and kind of try to see the future and see what else you could be learning. That way you can prevent mistakes versus worrying about what's already past. Worry about making your joy and peace last and your money as well. And so from there, we're going to start with what is the credit score. A credit score isn't just a number, it's a behavioral prediction model. Financial institutions using scoring algorithms, which is a scoring system, most commonly the FICO and Vantage score to analyze your past borrowing behavior and statistically predict your future repayment risk. It's not measuring morality, it's measuring probability. The system asks, based on millions of people with similar patterns, how safe is it to lend to you? So your score isn't personal, it's mathematical trust. It's kind of like a video game rating. Like if you finish a mission and return equipment, the game trusts you with bigger weapons. If you lose gear and quit missions, you stop getting upgrades. Or like if you getting like a library card, it doesn't happen at the library, but it would be like if the library were to say, we're gonna start you off with one book, and then based off of how on time you are returning it and everything like that, usually that's what it'll go and allow you to rent more books. And that's just an example. That's not a realistic thing. Most libraries already have a set amount. And score ranges. Well, we already have this on the screen, the credit score breakdown. As you can see, payment history is 35% of it, and that measures on time versus late payments, delinquencies, and then that's 35, and then there is the credit utilization. This is an error. I guess the system had some gas or something. It put the wrong percentage. So we'll just focus on this side right here instead of the actual pie graph. So the credit utilization is 30%. Credit utilization is strictly if you have credit cards, is how much of your credit cards you're using. So if you have a one credit card and that credit card has $1,000, 30% is $300. So anything over 30% is going to impact your credit score until you get it below 30%. And from there, there's also length of credit history, credit mix, and new credit inquiries. Length of credit history, it averages all of your accounts together. So if you only have one account and you've had that account for 5 years, the length of your credit history would be 5 years. But if you were after 5 years to get a new account in addition to that 5 year account, then the average of that new account and the average of days for 5 years will be divided by two, which is how many accounts you have. And that will become your new length of credit history. And that is the reason why when people pay off accounts that they may have been paying off for a while and it closes, you see a temporary drop because what it has done is impacted your length of credit history. Even though it's giving you a positive payment history, but it has lessened the years of your length of credit history. That's why I always tell people if you care about credit, pay off your credit cards, but don't close them because it can impact that as well. And also, credit utilization goes up the more you get credit increases, but I'm skipping ahead, so I'm gonna continue. And for score ranges, score tiers don't just affect approvals, they affect pricing. This is called risk-based pricing. Two people can get approved for the same car, but the person with the lower credit might pay 8,000 to 15,000 more over the loan due to higher interest. Credit doesn't just determine access, it determines cost of access. That reminds me of when I had my first vehicle. It was financed through a mom and pop shop because I was 20 years old, didn't know anything about credit, had opened the credit card at 18 and completely forgot about it. And so I didn't have any credit. And I had $2,000, 2010. I had $2,000 to put down on the vehicle, but the only place that accepted me was the dealership on the corner. And it was for a 2006 Kia Rio. And at that time, they were probably worth $6,000 if you bought it privately. But that dealership, due to them being in an area where a majority of the people were going to have bad credit, they were able to just get cars from auctions for whatever price. And instead of paying 6,000, they financed it to me for I believe 12,000, and after interest, it was like $18,000 for a $6,000 vehicle. And places like that are all over the country. So people every day are taking part in that. And there's nothing to be ashamed about. You can't be ashamed. Well, you can be ashamed. People don't be ashamed because that's what they want to do. But you should not be ashamed about things like this. Like it easily is a thing because when you look online, the first thing people are doing is making fun of what other people don't know. That's perfectly fine, but the long-term impact of that is that you're alienating other people from speaking or asking questions. And it's kind of like in school, the people who made fun of people who ask questions, the people who did that in my class, if they're still alive, they're really not doing well in life. So if you are present and you want to make a change and you see errors in your ways, you're actually doing better than most people. So keep going. And imagine two kids buying the same PlayStation. One pays $500, the other has to pay $900 just because the store doesn't trust them as much. And then there is payment history. Well, for the score, let's go back to the score. Moving fast here. The lowest score is 300 allegedly. I thought it was 350, but who knows? Well, matter of fact, let me double check right now because this is a very important topic and it's not something to be going off the head with. Okay, that's correct. I just had to double check, but it is 300 through 850. So if you're in the 300 through 579 range, many lenders decline. If you're, let's see, 580 through 669, that's fair. It's below average. But when you get approved, there's usually those second chance places like second chance car loans or second chance loan places. A lot of online places have more lenient rules to who they lend to because they don't have the same overhead cost as brick and mortar or in person loan places. And they don't have to pay the same amount of people. Then there's good, which is 670 through 739. And most places will approve you with that. And then there's also very good, which is 740 through 799, indicates low risk borrowers, often receiving favorable terms. Then, of course, there's 800 to 850, which is exceptional, and they qualify for the best interest rates. And now we can move on to payment history. With payment history measures severity, frequency, and how recent your missed payments were. And that means how late were you? 30 versus 120 days? How often did it happen? How recent was it? A single 30-day late hurts, but repeated 90-day lates signal default behavior. So basically, on the credit report, when your credit report is being reviewed by creditors, whenever you have late payments, the more late payments you have, they are seeing you as a risk. And some of the creditors have systems where when you do applications, the system automatically checks some of the things you say and it'll auto approve it or auto decline it or send it for review because of things like that. But if you ever have a late payment, like if you know you're going to be late, call the person, the creditor, as soon as possible. Some places, sometimes if it's a credit card, you might have payment insurance that you forgot you signed up for, or if it's during a natural disaster or like during 2020, they had a lot of different things for credit agencies to help people. And it can be embarrassing because that's another part of shame where when people have these bill collectors call in, especially the way they robocall, it's easier to avoid them versus speaking to them, especially when a lot of them are trained to still ask for money, even if you tell them that you have nothing, like the song, but they still ask for more. And how often does it happen? How recent was it? And also, lenders distinguish between isolated hardship and habitual delinquency, and that they look at it over time. So if you have one late payment 2 years ago, 3 years ago, it brought your score down. But if you continue with positive payment history, it more than likely brought it up, and it does show up on credit, but you still may get approved. It's just your interest rate will be slightly higher. But when you work with the credit places, some credit companies and some loan places, anything that has payment history, ask them before you sign up with them what their late payment policy is. Or if you're already signed up with them, see if they offer a removal after so much time. There are some companies that if you are late now, but if you make positive payments for the rest of the year, you could call customer service and request a late payment removal. And that helps a whole lot. If it's just one late payment and you get that removed, you back in. Even with it, you're still back in, but it probably does something to your ego because I know there's people like to brag about the credit score, which is not safe. People will try to steal your identity that way. And a person with one late payment 4 years ago may score higher than someone with perfect payments but maxed out cards. Why? Because repayment reliability over time outweighs temporary balance spikes. And if you forget homework once, the teacher is annoyed. If you forget homework every week, they stop trusting you completely. And you can use that in comparison to payment history and its impact. And then the next is credit utilization. I actually jumped jumped the line and mentioned that earlier, but I don't mind going over it again for the sake of the video being in order. And let's pray for future me that he puts the timestamps so each section can be ordered. It was already hard enough doing a video in order because episode 1 through 3, you can see. Utilization measures, okay, credit utilization, and it's 30% of your overall score. This picture display is just an example of what happens if you have one credit with 10%, and then where you're using 10% of this card, 75% of this card, and 95% of this card, depending on the total balances. So if this balance is 1,000, this balance is 6,000, this balance is 10,000, you add all of those up together and divide it by 3. No, never mind. Basically, whatever the percentage is, however much you're using, the system will automatically calculate it for you, so you won't have to worry about that if you're using any credit monitoring apps. Usually, all of the credit card companies I've seen, when you have their apps, they offer free credit information and they also offer free credit counseling because they also want you to have better scores too, because then that means that you can have more money to be in debt with. But they just want you to be in debt responsibly, which is awesome. You know, it's always good to be in debt. So, utilization measures revolving debt pressure. High utilization signals dependency on borrowed money for survival. So, high utilization, that's signaling I'm in the bind, Nate. So, scoring models track per card utilization, overall utilization, meaning maxing out one card hurts even if your total utilization is low. That's kind of like in this picture where you see there's one that two that's pretty much almost maxed out. So even though you have one that's 10% and that company is looking at you like good job, these other two are asking, are you okay over there? What is going on? Like you're over, and that makes your overall utilization 85%. And there's a psychological risk layer too. High utilization correlates statistically higher with default rates. So the system assumes if they're using most of their credit, they may be financially strained. And that is based off of past information. Credit companies have millions of people's information, habits, and credit scores have been around since the late 80s, early 90s. So they're basing it off of history and human behavior. And so you may have the same spending habits that someone who was laid off in 2008 had right before they went into default on everything, or multiple people. So that's kind of what it is. Even though it's a system thing, and from what I experienced, if you ever have issues with anything, you usually can call these companies. They will help you because they have a lot of laws that protect you as a consumer. And the optimization strategy is keep each car under 30%, ideal range 1 to 9%. Report small balances, not zero across all cards. So what it's telling you is to not leave cards with empty balances. So if I have that $1,000 card, maybe I could just put a subscription on there every month. So it has a balance, but I'm paying the balance off before the statement date. So if the statement date every month is the 30th, what I want to be doing is paying whatever balance I have down before the 30th, and then after the 30th, the next month, use a little bit of money and kind of do it like that because it basically continues to add payment history to your payment history. Because it's like, for instance, if you have a card and you pay it off and you never use it anymore, that payment history stops as long as that card is at zero. Whenever you use it again and have to make a new payment, that's when it adds more payments. And the more payment history you have, the less it hurts if you ever get a late payment. That's why usually when newbies to credit have anything negative, it sends their credit score to the underworld because it's really nothing, no history. Like if you meet a person and you know nothing about them and all they did is bad things, the average person is going to assume they're a bad person. But if you see them do have good, have bad things, depending on your way of thinking, you may give them the benefit of the doubt. And that's the way you can connect that to credit. If someone lends you 10 toys and you're using all 10 every day, They think you really need them. If you only use one or two, you look more in control. So also managing your credit in the optimal ways mentioned before, it usually leads to quick credit increases. Like you can definitely achieve that. But with credit is like it's kind of like fire. Like it's useful. You can make food with it. You can stay warm with it. But if it touched the wrong thing, it can destroy a lot of stuff. So with credit, while building it, you also want to build overall discipline because these things are very tempting, especially once you begin to get better credit, you will be bombarded from every angle with offers of things to spend, not to mention the already current pressure that is from social media or just using anything. There's ads everywhere. One time I fell asleep and I seen an ad in my dream. So ads are really getting bad. And next is the length of credit history. Length of credit history. This factor includes oldest account age, newest account age, average account age. It builds what lenders call behavioral longevity. Time allows lenders to see how you perform across economic downturns, emergencies, lifestyle changes. Credit nuance is young borrowers are statistically riskier, not because they're irresponsible, but because there's less data to predict from. Thin files equals uncertain risk. That goes and connects. I don't know if you may have heard this, listener. First of all, thank you for listening and even making it this far. Holly Berry, what the hell? Hallelujah. Thank you. But what I wanted to say was that this goes back to what I just said as far as the uncertainty. And if you ever heard about bad credit and no credit is the same, it is, but you can definitely go from no credit to good credit better than a person with bad credit going back to good credit. Because at least with no credit, you can get a secure card that you put money on yourself, and that'll give you a credit score. And after 6 months of on time payment, you're going to start getting offers from everywhere. You might get an offer to get drafted to the NFL too because your credit's so good. And if you've known a friend for 10 years, you trust them more than someone you met last week is the comparison for length of credit history. For credit mix, go to credit mix slide. Credit mix that evaluates structural debt management. Revolving credit equals open-ended borrowing. Revolving credit are things like credit lines, credit cards, like Klarna, Afterpay. Sometimes Klarna and Afterpay show up as installment credit too. It depends. With these new age loan and pay later things, I've seen some fall under both. But generally, for me, anytime I've used them is when under revolving credit, because even after the pay now, pay later thing is done with for that particular item, there's an overall credit limit with that provider. And managing both debts show adaptability. Installment credit would be, let me get some examples of that. Installment credit is like a car loan. That's what an installment credit is. Or also a home loan can be considered installment. Or an installment loan. There's loans called installment loans. But here's nuance most influencers skip. Scoring models don't reward unnecessary debt. Taking loans just to boost credit increases financial risk faster than it improves scoring. Healthy mix should occur naturally through life, not artificially forced through borrowing. So what they're saying is when you see that your credit is good and you're getting approved for things, you want to act natural. Like they tell people in the movies, act natural. Act like you've been here before. As far as not, don't get carried away and trying to go and get multiple vehicles, a house, and some credit cards at the same time. Be a regular person, and if it's Christmas time, they'll understand if you get a store card, or if it's an offer you receive that's pre-approved, that's even better because it saves you an inquiry and those types of things. It's that's more of what that is. They are more afraid of a person who would get credit and then immediately start maxing things out fast. And you will see if a person tries that, they'll get a lot of approvals, but after all of that stuff catches up in the system, everything starts getting denied. And let's see, it's like showing you can handle homework, chores, and sports, not just one thing, but you wouldn't sign up for 10 sports just to prove it. So you doing multiple things in different fields versus trying to go overboard in one field. Like you driving a car instead of getting a mega bus and saying, "Hey, look at me." Now we have another contender, which is hard inquiries versus soft inquiries. Credit inquiries, because anytime your credit gets pulled, it leaves a footprint. But here's the nuance: not all inquiries affect your score the same way. There are two types: hard inquiries and soft inquiries. And knowing the difference can protect your long term score. We can start with hard inquiries. Let's start with hard inquiries. They happen when you apply for a credit or for credit, and the lender reviews your report to decide if they want to lend you money. They are evaluating which, if we approve this person, how likely are we to get paid back? So because risk is being assessed, your score can drop slightly, usually around 5 to 10 points per inquiry. And common hard inquiry examples are when you apply for a credit card, auto loan, mortgage, personal loans, store financing, and some apartment applications, or anytime you're requesting to borrow money. Expect a hard inquiry. The impact, they don't hurt forever. They fade over 12 months and they fall off your credit report completely after 24 months. So they're temporary, not permanent damage. And the 12-year-old way of saying it is like multiplying, asking multiple people to borrow money. And if you ask one person, no big deal. If you ask 10 people in 1 week, it starts looking suspicious. Personal experience. I've loaned those types of people money before and they do not pay back. Rest in peace to that money. Self inquiries. Now let's talk about self inquiry. Self pulls happen when your credit is reviewed, but you're not actively applying for debt. No lending decision equals nor score impact. So your score doesn't move at all, 0 points lost. And examples are checking your own credit score, credit monitoring apps, pre-approved credit offers, employment background checks, insurance quotes. These are all informational, not for borrowing. It's like someone looking at your report card without giving you a new grade. They're just reviewing, not judging. So to simplify it, a hard inquiry equals you're asking for money or some type of approval, which is usually money. Soft inquiry means someone is just reviewing your profile. Hard inquiries can lower your score slightly. Soft inquiries don't affect your score at all. How to know which one happened? If you ever want to check, you can just look at your credit report. You will see inquiry sections split into hard inquiries and soft inquiries. And the quick rule of thumb is if you apply for credit, it's hard. If you didn't, it's soft. Now, a nuance to that nuance is that you will, once you get in the credit game, you will have pre approved offers. With pre approved offers, they don't run your credit when they gave you the offer, or if you request pre approval from a website, they're not running your credit to see what your pre approval is. Your credit isn't ran until you actually apply for the final deal. So, like if you get a pre approval for a car, there is no impact on your credit. But what a lot of dealerships do, since the dealers get kickbacks from using particular banks, you may have a Navy Federal pre-approval, but the dealership is still gonna run your credit through all of their banks, which it ends up with multiple hard inquiries. But back to what we mentioned earlier, when you're shopping, after so many days, the system catches that you were shopping and it combines all of those inquiries to one or sometimes two if it's within a period. But it's worth doing research from trusted people. You can attempt to ask the place you're applying to, but people, anyways. So a lot of people avoid checking their credit because they think it hurts their score. That's false. Checking your own credit is a self inquiry. You can check it daily if you want to. I used to when I first started like my credit journey, kind of like when people start a weight loss journey. I was checking numbers every day. But then eventually, when I got to a point where I knew what I was doing, I no longer looked at it because I wasn't needing it for anything. Like I wasn't looking to buy a house at the moment or hoping to get lower interest rates. I just made sure keep my credit cards down, realize that credit cards are not my money, that's someone else's money, and that credit cards and money are tools to be used. But just like tools to be used, when you misuse them, they can cause harm. And it took discipline. It took years of unwriting learned behaviors from childhood all the way through adulthood. Influences from work, coworkers influence you. They'll influence you to go out for drinks. They'll influence you to do different things like that. Buy gifts. Family members influence you for buying food for events, having the biggest event. Friends will influence you due to their influence from social media. Buy this, buy that if you're a part of anything. So it's easy to be pressured to be irresponsible because our brains like simplicity. Most negative things are simple to do. Positive things, if you don't do them regularly the way you're accustomed to those things, they can feel like it's like sometimes it's like it's easier to just stay in the grass with the bugs versus walking on the cement because you can't see the path it's taken, but that path could be a clear path versus the one you're used to. And this is where beginners turn intermediate. Spacing matters. If you apply for multiple credit cards in a short window, your score may dip temporarily. But if you're rate shopping for a car or mortgage, most scoring models group these inquiries as one, as long as they happen within a short time frame. So intentional applications equal manageable impact. Desperate applications equal risk signal. And this ties back into the bigger picture because credit scoring isn't emotional, it's behavioral analytics. Every inquiry tells the system a story about your borrowing patterns. And the goal isn't to avoid credit, it's to engage with it strategically. Hard inquiries was the hardest part. No pun. Because I wrote a lot. And next is statement date versus due date. Most people think paying before the due date protects their score fully, but credit bureaus receive data on the statement closing date. That's when balances are reported, so timing matters. You can pay on time, avoid interest, but still report high utilization if you wait too long in the cycle. Scores drop temporarily, even with perfect payment history. The way that looks in real life is saying that if your due date, like on this picture, is May 10th, right? And maybe it was a birthday, an emergency, or something like that in April, and you get paid probably May 1st. And you were comfortable doing it because you knew that you were going to have the balance paid before the due date. But what ends up happening is on April 20th, that balance that you have is reported. So if you're someone checking your credit score, you will receive a notification that your credit dropped. But what will happen is if you continue to keep the balance cleared or whatever the issue was fixed by June 10th, the score will go back up. But for people who are learning about credit, it's nothing worse. I don't know if any of you have felt it, but having that feeling of your heart drop from your credit scores drop notification. And not to mention, some of these credit apps will send you individual notifications for each point that dropped and why it dropped. So they definitely hold you accountable, but we have to remember this is the system that we're working with, but we're still people at the end of the day. We still have real issues. So, yes, the credit is beneficial to know about and use, but we can't ever let things in our life that are out of our control make us feel bad about the results of things we're working on. All we can learn to do is work around it. If we find, like for me, one of my struggles with finances and saving was that I would save very well, but then I would overspend the checking account money and end up borrowing from the savings account money. And it wasn't until I stopped feeling guilty about it and really thought about looking at everything, looking at all my behaviors, going through my bank account and looking at what I usually spend on. And that was before all of the technology. Now you can have the computer tell you what you spent on in the category and the name and unsubscribe from you. So that's nice that we have those advances. But you definitely don't want those things to discourage you, because what it does is put you in a place where you feel easier just throwing it away altogether. Especially because a lot of the times when we set goals based off of that mindset we're setting the goal in. So if you're setting a goal right now out of being under stress, or if you're setting a goal now out of being blessed, when you're executing that goal, you're going through different days. So every day is different. And depending on the environments that you're in, it may be a roller coaster. So when you're setting those goals, you're not being negative if you plan for those roller coasters with the goals as well, or give yourself cushions, weeks, and turnaround periods. But the best thing you can do, even if you have to take a break, is to never fully give up, because 300 days of doing something, if it took 1 year to do it versus if it took 3 years to do it, it's still 300 days of doing it. That's still 300 days of skill. That's still 300 days of effort. And you can have accountability partners. This is my bias jumping out right quick. I honestly think that that's some very tricky things, because just because we're around people, they're not always supportive to stuff. And it goes to psychological things as far as just our own shame and competition and inferiority and things like that. Or it could be cognitive dissonance where people think that it's just mumbo jumbo. So you can always get online and find community, but this is credit, which is your identity. So be very careful, very, very careful. That is why I'm providing all this information for free, and we'll be breaking down each of these sections further and segue into other elements of financial literacy while still staying grounded with psychology and things of that nature. But back to the video. That was unplanned completely. So it's like your teacher grading your desk when the bell rings, not when homework is due later. If your desk is messy at inspection time, you still lose points. Authorized users. This is something that can be either good or bad. It depends on what you do. The idea is beautiful because you really can jumpstart your credit at an early age. If you have a responsible person in your life, they can add you as an authorized user, and you immediately get that account that they added you to added to your credit report. But the negative thing is that if that person, the owner, maxes out that card, your credit will be impacted temporarily until it's fixed or until you are removed as an authorized user, which, by the way, many financial institutions usually have free authorized users. Depends though. Some may charge, especially if it's a second chance bank. They have all types of hidden fees, unhidden fees, fees in the bushes, fees making wishes, just a lot. And authorized users transfer account age, limit, and payment history. This can accelerate credit building dramatically, but lenders also assess primary versus authorized responsibility. So while it helps with scoring, it may not carry equal weight in underwriting decisions, meaning it's a boost, not a substitute for your own credit history. So what it's saying is you can use the credit to get things that are less important, that are easier to get approved. But if you're trying to do something like a house or like a serious loan that requires underwriting, then solely having an authorized account is not going to help. But if you have already have credit and you just need that boost, or if you have no credit and you want to have a name and get started, that's the way to do it. It's more of an assistance. Like, instead of looking at it as a house foundation, look at it as maybe a garage or a new roof to the house, not the whole house itself. You still got to build your own house. And next is collections and charge offs. Negative marks have several tiers: late payments, collections, charge offs, repossessions, foreclosures, and bankruptcies. Each layer signals escalating default risk. Paid collections help lending decisions, but may not immediately boost older scoring models. Time and new positive behavior is what builds trust. So when it comes to collections, charge off, repossessions, all of those things, be very, 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 very careful. Very careful. Because some of these entities have sued people. Like, it used to be where you could just let stuff go to collections and count them 7 years, avoid the phone calls from collection agencies, don't reply to their letters, because making contact with them after you're in collections resets the 7 year time frame. So the 7 year time frame would start from when you go into collections. Some companies, I feel like they used to do when you first went into debt, but we could just say, for the sake of this video, when you first go into collections, it's 7 years. But if you like, if it's been 3 years since you went into collections, which means that you have 4 years left. If you were to reply to an email, the streets say now they're even doing social media. I don't know. I deleted it. An email, a phone call, a postal mail to the collection agency, that'll reset the time frame. So those 3 years are gone. Now you got to wait another 7 years. However, I would definitely do a video on collections and charge offs separately to go deeper. But keep in mind, this is a psychology, um, personal development, just all around type channel. Sometimes I might be cooking. Sometimes I went on live playing the piano. It's all kind of stuff over here. But the overall theory and goal and ideology is understanding and realistic positivity, not blind positivity, not Care Bears and gummy bears and rainbows. It's basically looking at the world that we in now, looking at what we working with, because we always shine on the negative stuff, but there's so much beauty and positivity in this world, and beautiful and positive people too. Shout out to the people I've met, throughout my journey, and like, it's some very beautiful people. So that's what this channel is about. But when it comes to collections, I was able to get a lot of mine off during COVID because of a lot of those places not responding, because they have a period that they have to respond if you dispute it. But again, that's going to be a different video. If you break one rule, you get warned. If you keep breaking rules, you lose privileges completely. Utilization has no memory, and it recalculates monthly. So with utilization on credit cards and stuff, if you were maxed out for 3 months a few years ago, your sins are forgiven. It does not carry with you. And if utilization have no memory, we have to learn to stop having baggage memory. Because when we carry baggage, which and unprocessed emotions from anything, just imagine you have luggage chained to your backside. Everything you don't process and that you add, that luggage gets heavier and heavier. And eventually your emotional states become so unstable because you're carrying a lot. Like, that's like trying to run to the airport with 50 pounds of luggage and it's 20 minutes before takeoff. So yeah, don't be that, because I've done that before. It hurts. Very painful. And high balances don't start your report long term. They only affect the current cycle. This makes utilization the fastest scoring lever you can control. If your room is messy today, you get in trouble. Clean it tomorrow, you're back in good standing. That's the way utilization works. And then the psychological and societal nuance is that credit scoring also reflects systemic design, because credit scoring is a system, which is a part of the financial system, which we can get into that in another video. We have a lot of videos we can get into. Because for me, my method of doing content keeps me recharged because I'm not delving into it like previous attempts. I'm not overwhelming myself with analytics and interactions and things like that. I'm already giving this information free of charge. In the future, when I make a Patreon for videos I'm not putting on YouTube, that's gonna be free of charge. I don't want people money. The best thing you can do is pay it forward to yourself first, because I will never recommend people running out here being Salvation Army when you need the fire department inside. Like, take care of yourself, understand yourself more, love yourself for who you are right now. Right now, love yourself for who you are right now. You can have all of those improvements that you seeking, things in life that you seeking, but love everything right now, because all of the things that's not negative, you ask for it. You have a job, you probably prayed for that job. Not to say if you have any negative experiences, first of all, sue those people. But secondly, that's something like, I'll use myself as an example. If I go back 10 years, pretty much most things I have access to now, that person would be amazed to even know that I was able to do that and more and even elevate. So please always leave grace for yourself. You're going to see your life change. You will, because it's easier to stay where we are now. That's why it's so hard to leave away from it. It's so much easier, especially if our nervous system gets used to wild environments. We still gonna feel uncomfortable, but it's kind of like a person who's been in pain all their life. If they've been in pain all their life, they don't know what it is to not have pain. But if the pain worsens, they know that it worsened. But if it dropped back down to the baseline, it's still there. So, you know, and credit scoring rewards stability, predictability, institutional participation. It struggles to measure cash earners, informal economies, first generation borrowers. So some populations start with structural disadvantages, not behavioral ones. And that's like many minority communities, they have that issue, including mine, which is why financial literacy is power. It teaches you how to navigate a system that was never fully explained. And that brings us full circle, because once you understand how the system evaluates you, you stop moving blindly. You start driving with visibility. And in the next episode, we'll break down, build, repair, and optimize your credit strategically for free, for free, for free. Completely free, completely free. I think the cost is probably getting through my renting. That's the cost. So yeah, there is a cost for everything. And that is it. Let me show this slide. And then I also, well, I showed that one already. I have a actual sample credit report that disappeared, but we're gonna find another one. That way it could kind of drive home some of the stuff. But I think it was already up there. Oh yeah, I made a new window. Okay, so let me share that. Okay, am I sharing? Oh no, it's right there. Okay, this is a sample report. This is sample. This is not anyone's information. John Consumer. Okay, it starts with the personal information. I feel like this might be outdated, but we gonna work with it, John. The way this works is, if you've ever signed up under anything, like even if you had a job, sometimes certain jobs report to the credit bureaus. So like if you told one job your name was John, but it's able to register under all of this information, that's basically where that will come from. And addresses associated with your credit, they find that all types of ways. Usually it's through your credit cards, but I've had this update even when I didn't have credit cards. And then this is other personal information associated with your credit. It's always good to look in this area because in like 2010, somebody had a house on here for me in Texas. And then this is personal statements. So you can add for people reviewing your credit. Hello, I know my balance is high, but I'm in a bind, Nate, and I'm not able to pay my bills right now. So please spare me and approve me for the things that I need for this time period. And I'm going to make sure that I pay you on time. I've never used this personally, so I have no idea the effect it will have on an application. Please don't get to the point where you would need this unless it's like something like this message, file frozen due to state legislation. But, and then this is potentially negative items. There is no public record, which if you have any liens, lawsuits, even evictions, come up in public records. Now, another fun fact, I had an eviction in 2014. And when I disputed it on here, I don't know if it's because it's court systems, but it did not give me any issues with falling off. And after that, it was like it never happened. So some things you can try to dispute and it may work, but it just depends. And we will be going into disputes on other videos because to my knowledge, what a lot of credit repair people do is all they do is just send dispute letters because the letters usually take longer to process and they pass the dispute date and that's how the stuff fall off. That's not always guaranteed. That's why some people may get credit repair if they got 15 collections, but I bet you had fun though. I bet you had fun. When we have mess ups, there gotta be some fun behind it. It has to be, unless it's an emergency. It's not fun. But as far as fun spent money irresponsibly, you please have fun. If you're gonna be irresponsible, make sure you have fun and you can laugh about it later in life. Do not be doing irresponsible stuff that is not fun, like texting and driving. Who wants to die for what you doing message? Anyways, so this is that. This is no public records, and this is one collection, and it would have been a credit card. This was their balance when it closed, and no, it says open, so it was late. Yeah, it was late, May 15th. I mean, May 2, 2015. I guess that's a new late. Everything backwards. This is just an idea of it. This is account in good standing, recent balance, credit limit, and it's an auto loan. Here it says credit card, revolving balance. This is the installment loan. So installment term is 60 months. So you get to see two examples. You see a credit card that's open, but they having some issues. We're gonna pray for John Consumer. And then this is auto, and you can see that they have good history throughout the whole time. This is when it's first reported, status current, they open, and then here is a rental. I've never personally had that come up on my credit report for actively renting, but everywhere is different and there's so many new business models now, it may be possible. But they do have with Experian and a lot of the other credit websites where you can add things that you pay monthly and it'll boost up the credit score for just that bureau. So if you do an Experian boost, it only boosted your Experian score. It didn't boost the other two. And also keep in mind with credit, okay, this is the credit inquiry right here. This is a bad example because you should never have an Experian credit inquiry because unless Experian have a credit card. Other than that, Experian is a bureau. So if you're using it for bureau services, you won't have a credit inquiry. And it's a disclaimer. We make your credit history available to your current and prospective creditors and employers as allowed by law. Personal data about you may be made available to companies whose product and services interest you, which they mean as far as those people that blow your mailbox, inbox, and phone box up with. We display these requests for your credit history. And this is your rights. All of that will be covered in future videos because credit is its own multiverse. I don't know if any of this contact information is accurate, so disregard those. And then that's all of the notifications and rights for different states. And that is it for today's portion of credit. And I wish everyone the best who made it this far in the video. Thank you for watching. And again, keep your head up. Continue striving to be better, but simultaneously appreciating where you are and the fact that that there is an option to grow. That's already good enough. And remember, is a community, and we were raised and bred to be in community, but also understand that growth is a singular thing. Unless it's a facility specifying in that or a specialist specifying in that, you cannot trust growth with other people, especially if it is it makes you different to who they're used to, because you really never win in them situations. You explain yourself, they still don't get it. You try to edit yourself or make yourself more visible, or it just does not work. And then you end up with resentment because it feels like they jealous of you, or if it's something y'all both wanted at a certain point, you're thinking that what you're doing is going to get them to it as well, so y'all can share that together. But there's only one driver's seat in vehicles. There's not two driver's seats. You can only be a passenger. And we start off life as passengers, well, hopefully, in a safe environment or a semi-safe environment like mine. You're a passenger, and then when you become an adult, you are your own driver. And then for people in committed relationships, you have a co-pilot. You go from driving to flying. And then when it comes to your friends, y'all are on singular journeys in separate vehicles, but y'all share the same pit stops. Sometimes one road may lead you a few pit stops away from them, but true journeys, you can always link back with people, because just because someone lives in the projects and I grew out the projects, we don't have to stop being friends because I don't live in the projects anymore. But what tends to happen is we stop relating to each other because the person you leave behind still speaks the same language that you don't need anymore. The levels in life you need, that language is not spoken. So you tend to see better ways of doing things. You tend to outgrow learned behaviors because we all grow up and realize certain things were not right. We can even go back and look back at childhood movies and see stuff wrong, or just all types of stuff, or even think about things we've done and think about, dang, I did that at this age. Not for me though, I was an angel. But if you were not, I understand. So I wasn't like, I was the school angel. Like, oh, that screen did something. I'm like, what's going on here? But yeah, so without further ado, that's the end of the video. And remember, you're a baby in this situation. Babies know that they babies, they know they're alive, like you alive in the credit world, but you learning, you growing. And bookmark the video if you need to plan it in the future. And if you have any questions, my email should be in my bio of this page. But dear God, please use full sentences. Use ChatGPT if you need to. For me, I can't process small talk because the way it's presented always seems strange, because you can tell a person wants to say something. And while I understand that's a conversation starter, but just like a house, you start with a foundation, but you also have to build on top of that. You don't just live, like I would love to live on top of the foundation of a house and not have to do anything else. That's not how it works, especially when you're reaching out to someone else. All of that kind and nice stuff, that's cute, you know, but no, you're requesting someone else's time to stop and engage with you. Respect people time, respect people energy. I understand that the internet has made energy so easily given away. People do it in comments all day for other pages that I used to see, but and on social media and all of that other stuff. But don't do that. I don't. play that. So you could try it. It's just if you get ignored, an email, because I am not looking at comments. I have not looked at comments. First of all, thank y'all for the comments, but no, y'all not gonna do it to me again this time. Y'all got me last time. I appreciate it though. And y'all be easy. And next video coming soon. But these topics may or may not be in chronological order. So like a video today is finance. You don't know what you're gonna get tomorrow. I don't know what you're gonna get tomorrow, baby. I'm working with my brain. Okay. Love y'all. I love you like a stranger would love you.
Like, comment, and subscribe to J New Orleans.